3, 2, 1. Whoop.
All right.
I was on the wrong slide, the wrong thing. It's okay.
Uh-oh.
Everybody will know. It was the show slide anyway.
Perfect.
I got one job on this show.
Yeah.
Push the right button.
Get a lot of jobs, like accordion master over there.
Yeah, I know. But it's all easy.
Yeah. Easy. All
What's
right.
going on, man?
So we're in the middle of TSP shutdown week.
Yeah.
Right? There was an article that came out a few days ago. Oh, it was the one I think we were talking about it last week. They said somehow Fed Week or somebody got a kind of an early look into what the new site was going to be.
Right. It was a presentation of some sorts. Yeah. Before it kind of came open.
Right. So they said it was gonna come back online June 1st.
Right.
And
it did.
It did. It at least started
Ish.
to. Right. Ish. Yeah.
Are you in yet?
No.
Yeah.
So my personal experience. So, what was it? Wednesday, I think, was the first. So I saw on Facebook that people were saying that it was online and you could start the login process. So I did that. Put all my information in. There's like a 3-part section to it. Put all the information in. Hit submit. It spun for like 10 minutes and then time me out. No problem. Go back and do it again. Put all the information back in again. And this time it wouldn't. It said that my email address was already being used.
Of course.
So so I tried a third time, and it just said you have to call the help desk. So I called the help desk. 2.5 hours later, somebody,
Nice person answers.
Nice person answers. She was very nice. She knew that she was being employed by TSP to do this job. Other than that,
that's about it.
She was very nice, but she couldn't.
I am the
answer.
call center. I can't help you.
Yeah, no. She was like, "Why don't you call back tomorrow?" I said, "Well, can I ask you a question?" Sure. Well, what about this? She's like, "You know what? You should probably call back tomorrow." I said, "Okay, great. I got it." So I call back tomorrow. I'm on the phone.
At least you got a human.
I did. It took a long time, but I got a human. So I call back the next day, and another 2.5 hours on hold. But I get a much more functional human. Okay. Didn't solve my problem, but she was very. She understood the problem. She could see my account in there. I explained to her at least what I did and the gist of where I think the problem is with the email address hang up. And she said, "Yep, I see all that. Let me write it up on a ticket." And as soon as she said ticket, I just took all the wind out of all the wind out of my sails. How many times have you gotten?
You are support ticket 12,476 today.
Right. And I'm like, of course, there's no number that I can't call the level 2 help desk, right? I'm stuck with the same thrift line that everybody else is. So at this point, she's like, "No, I'm like, "Yeah, I know." So they're going to call me back at some point.
Sure they are.
Yeah. So I have no access to my TSP until I do.
Yeah. And amazingly enough, you really need it, right?
Yeah. I mean,
yeah.
It's we weren't expecting it. They said the first week of June.
Yeah.
Okay. And we talked about it last week, the week before. I mean,
they can truthfully say it was back on up and running June 1st. Whether you can access it or not, it's a whole different story.
Right. And even if they get it all really 80% done by the end of next week, I think they could still argue it's the first full week of June. Right.
Yeah.
But I didn't even get to the pieces where, like, a lot of people were talking about how I guess you have to submit a picture of a license or passport or something. Like, it's doing a lot of things to validate you. Yeah. So I'm not anywhere close
to that.
No.
You haven't even just gotten your login
the initial
to start the process.
That stuff. Yeah.
Wow.
And it's not that they didn't know there was 6.5 million people that were going to have to do it.
No, they didn't know. Nobody told them.
No. So anyway,
they thought it was a couple of folks. Yeah. On the East Coast just managing their TSP.
Yeah. So the other thing that seems to have people wound up is this idea that there's a bunch of Congress people got together and are trying to put a pause on the mutual fund window because they don't want federal employees to have access to mutual funds that by Chinese companies. Okay. And I mean, we all have our political affiliations, and that's fine. It's kind of like ESGs. If you want to invest in things that you think make the world greener, that's awesome. If your return is secondary to your commitment to
belief system,
that's awesome. Great.
Yeah,
That's good.
that's fine.
That's great. Our objective is to maximize your TSP account and minimize downside risk, right?
Mm-hmm.
If you don't like that as the mission statement, if you think the mission statement should be, I'm not investing in any Chinese companies no matter what because China is bad, this is not the group for you.
Not that we're going to go looking for Chinese companies, right? But
no.
What most people don't realize is you can't throw a stick without hitting one, right? I guarantee you this cup was made in China.
100%.
And there's just water in this Facebook. Don't ding us again. We get dinged every once in a while.
Coffee cup today. Yeah. I was reading this article today on Elon Musk. He's worried about recession, and
as we all are,
right. So he puts out an email apparently that got leaked, and they put out a worldwide hiring stoppage, and they're gonna reduce their workforce by 10%. Mm. And in this article, it's talking about how some sites had already downgraded. I don't know if it was Moody's or S&P, but Tesla's been downgraded because of concerns about the stoppage in China because you can't get parts, right? So apparently he's got this really big manufacturing company in Shanghai, and I'm reading through this thing, and I'm thinking, Tesla is one of the biggest companies on the S&P 500. Mm-hmm. All their stuff is made in China from Chinese companies.
So whether you think you're invested in China or not, you are. If you're in the C fund.
Yeah, everything is made. Walmart. I mean, everything in Walmart comes from China. Like, you can't not be
They have a lot of American-made stuff at Walmart. Come on.
Does America make stuff?
Yeah, it does.
Yeah. We sell stuff. I don't know if we make stuff, but we sell stuff.
Rogue makes
stuff. That is true. Yeah. That is true.
We've got some companies making stuff. Come on. Yeah, but the point is, if you guys that are listening to this, if you get bogged down into that narrative of somehow thinking that a congressperson is going to block the mutual fund window because they want to save us from ourselves from investing in, like, guys, if you go look at go to Fidelity or TD Ameritrade or whatever, any other one, we have access to everything. Just choose not to invest in those companies.
Right.
You have a choice. And as Jerry pointed out, you're kind of invested in them anyway. Yeah. If you're invested in any of the indexes.
Right, any of them. All of it.
I wish it wasn't so, but it is.
You can buy, like you said, Rogue. I don't know if Rogue makes fitness equipment. Yeah, whether or not they're a public,
they're not publicly traded.
If they're not publicly traded, right? No, so if you want to invest in the United States, where does Rogue get their steel to build CrossFit rigs?
Yeah.
Maybe it's U.S. Steel, right? I don't know if that's even still around.
Yeah.
But it's awful tough not to have exposure to China at this point.
I don't care what you do. At some point, you're getting exposed to it. Anyway, I mean, again, this isn't a political discussion. I know as soon as some people listen to this, they're going to be like, but you don't understand that. What? No, we do. Trust me. And if I had a choice, I wouldn't, right? Personally, I would prefer not to. However, I have to be realistic and know I can choose to expose myself, my money, to whatever I want if you take the restrictions away. I mean, if you don't give me any restrictions, let me choose.
That's all I'm saying. If you can, the mutual fund window, it's restricted enough that you can't do ETFs and other things, right? Why would you restrict government employees' ability to invest in companies or funds
that are making money?
Well, that are more restricted than the general public.
Right. Restrict us more than because they're saving us. They're saving us from ourselves.
It's a safety thing. As you pointed out, this is only a political thing, and they're grandstanding, and it's probably not going to happen anyway. So,
and on to the show.
All right. This is going to get a little more technical as we go forward, but it's one of my newest favorite indicators. So, Commodity Channel Index, I think we talked about it last week, but we're going to do a bit of a deep dive into it. I'm going to show you how I'm using it on my StarkCharts.com what the settings look like, and you guys can replicate it if you want. Bonus chart is going to be XLE. It's the energy index. Energy is pretty much not the only sector that's been going up this year, but it's certainly it was the biggest sector in 2021. It's certainly been the biggest sector in 2022. And could we have seen the breakout in XLE back when it really broke out? We're gonna look at that, and then we get the TSP 2.5 year charts. Okay, so first let's do a little quote for the week. So this is from Paul Tudor Jones. He's the CEO of Tudor Investments. He was born in 1954. He's an American billionaire hedge fund manager, conservationist, and philanthropist. In 1980, he founded his hedge fund, Tudor Investment Corporation, an asset management firm headquartered in Stamford, Connecticut. 8 years later, he founded Robin Hood Foundation, which focuses on poverty reduction. As of April 2022, his net worth was estimated at $7.3 billion, his personal net worth, not his company. So he's not as famous as Warren Buffett and some of the others, but he's definitely up in that league. And I know we keep harping on this, but we're going to keep on harping on it. The most important rule of trading is to play great defense, not great offense. Every day I assume every position I have is wrong. I know where my stops are, and I do that so I can define my maximum drawdowns. At the end of the day, the most important thing is how good you are at risk control. We talk about it all the time. It's the opposite of the idea that the market always goes up. He's saying he assumes the market's always going down. His number one priority is to make sure he doesn't lose money. Okay. Commodity Channel Index. So hopefully you guys can stay with me because I got a few slides that are, and then we're going to get to some charts. So CCI was developed by Don Lambert, featured in Commodities Magazine. It's in 1980. It was in Commodities Magazine because it is an indicator that originally was used for commodities, not for stocks. But it's an indicator that can identify a new trend or warn of extreme conditions. So originally it's developed to identify cyclical turns in commodities, but it can be also applied to the indexes, which is what we use in TSP, ETF, stocks, and whatever else. So in general, CCI measures the current price relative to an average price over a given time period. Okay, so you're looking at, if you're looking at a daily, if you have a big price move above the average price, that's when CCI pops higher. Or conversely, if you have a big price, drop in one day, relative to an average, which the default is 20. So you get a 20-day average. If price drops significantly below that, then CCI drops. So in that way, it's used to identify overbought or oversold levels. You can also use it to identify new emerging trends. So it's an oscillator, and it goes between negative 100 and positive 100. So when it gets above or below that 100, whether it's negative or positive, it's showing an unusual level of strength or an unusual level of weakness, right? So it's one of the indicators you can use as a buy or sell signal. So like they say, think of these levels as bullish or bearish filters. Technically, CCI favors the bulls. Okay, this is kind of an important one. Technically, CCI favors the bulls when positive and the bears when negative, right? So it's going from positive 100 to negative 100. So at the zero line, if it's just above zero, it's favoring the bulls. If it's just below zero, it's favoring the bears. But if it's the entry points will lag, requiring a move above plus 100 for a bullish signal and a move below minus 100 for a bearish signal to reduce whipsaws. So if you only use it as from the crossover of the zero line, you'll get whipsawed all around. We're gonna take a look at that in the chart. So the chart we're going to look at here is, and all this is off a chart school. This is the link, schools.stockcharts.com. You just plug in CCI, in the search box. Okay. So here's a chart of Caterpillar. Okay. What they're showing, here was the top, a top. When CCI got below 100, okay, so here's the minus 100 level. When CCI gets below that 100 level, it's a sell signal, is what it's saying. And it's kind of a late sell signal, as you can see, because the market obviously had already come down before that sell signal gets triggered. That's if you wait until CCI gets below 100. If it had gotten below 50, you would have, if you owned it, you would have gotten out back in here, right? But it's more likely to whipsaw. Whipsaw meaning it reverses and goes in the other direction. Kind of like here. If you had a big down day here, when it crossed back below that, down through that 100 level, if you had sold there thinking it was going to continue down, you would have gotten a whipsaw because it turned right back around and went positive again. So because of that, they're trying to reduce the whipsaws. They're in this case, they're showing that if you wait until you get a negative 100, then the odds are it continues down lower, right? If you wait until you get a positive 100, right, which is up here, so you didn't get any of this gain, but you got all this gain. Okay, so it's a late indicator if you use it that way, right? Okay. So bullish and bearish divergences. So divergences signal a potential reversal point. Bullish divergence occurs when underlying security makes a lower low and CCI forms a higher low. So we talked about that in terms of relative strength. And you can do the same kind of divergence. It's easier to look at on a chart, so we're going to go to that next. But divergences are pretty useful. So in this case, you are way overextended, right? We're at like 200, right? And we're saying that 100 is really the beginning of being overbought. If you get all the way up here to 200, as it starts to come back down, right, momentum is definitely shifting, even though price is continuing higher. So in this case, you get a high here at 200, and you have a top, right? And we have a little bit of consolidation here, but then the price moves much higher, even though the CCI does not go as high as it did before. So it's a negative divergence, right? CCI is decreasing while price is increasing, okay? So it's letting you know that a top is coming, okay? And then when CCI finally does really kind of crash, gets down here below 50, and you would have known it anyway because the market's crashing, right? You're still drawing trend lines, and because these are, CCI is just one indicator. You draw the trend line. If it broke down here below the trend, CCI is down here at negative 50, or at the zero line rather. It's probably time to sell it at that point anyway. But same kind of thing here. You have a high. Where am I? You have a high here. You have minus 100 down here. You have a little bit lower on this high, and you have a higher CCI on this high. So as price is coming down, right, you have lower highs, but you have higher lows in CCI. So it's a divergence that's telling you that a bottom is coming, right? It's the opposite of the one we just did. So I think you guys get the idea anyway for divergence, right? Same kind of thing here. You have a high, and we're very high here in CCI. Price keeps going up. We put in a new high here, but a lower high in CCI. So divergence is definitely good for setups. It's not an exact timing tool, but it tells you that to anticipate a top or a bottom coming. All right. So conclusion, CCI, it's a pretty versatile momentum oscillator. Can help you identify overbought and oversold levels. It's definitely better for trend reversals, I think, if you get to see the setup of a divergence. indicator becomes overbought or oversold when it reaches a relative extreme. And the problem there is relative, right? Because you never really know. That extreme depends on the characteristics of the underlying security and the historical range for CCI. So you can't just look at it in a silo. You have to take it into context over time in the chart. Okay. So why do I like it? Here's how my charts are set up right now. Okay. So here's a 1-year chart of the C fund. If we look at let's see. CCI got to 100 here, right? RSI on the same day got over 50. The MACD had already crossed. That was that day right there. Okay. We got above the 20-day exponential moving line is the blue line. So I'm looking at a handful of things. We were in a downtrend. We broke above that 20-day exponential moving average line. RSI got above 50. CCI got above 100. And MACD was leading. It had already crossed the upside. Okay, so I just stack all these things on top of each other, and that's a buy signal. In this case, it worked really well, right? It does not work as well on the downside because price falls much faster than it rises. So if you had waited, we have a top in the CCI here. We had a negative divergence there in RSI, right? So the negative divergence in RSI, as price is going higher, RSI is making lower highs. So that's telling you a top is coming, right? You get a top in CCI. By the time we got back down here to negative 100, we were like here. We'd already missed a big part of the move because price moves much faster on the downside than it does on the upside. So it's a much better indicator for getting you in earlier at the bottom than it is getting you out earlier at the top. Hopefully that makes sense. And right now, if you're a subscriber to the site, you're probably 100% in the G fund because we've been there for quite a while. And what we're looking for is an opportunity to get back into the stock funds, right? So if we look at it on this day, RSI got just barely back above 50. CCI is not quite back up to that 100 level. MACD has already crossed. And on that day, we poked above the 20-day moving average line. So almost all of those are lined up, right? You got to take there's a lot of other things to take into consideration, right? You got a lot of resistance right here. So maybe price doesn't have that much higher to go before it rolls over. We're definitely in a bear market anyway. So, maybe we get through this resistance level and we get up to this trend line and come back down. If you think that the ultimate bottom of this thing is in right here, the ultimate bottom of the bear market is in right here, and it could be, who knows, then this could be the best day to get back in, right? That's kind of how you look at the charts and make a determination of how you want to make reallocation decisions based on that. All right, so this is a one-year daily chart of the C fund. So here's what it looks like. If you go to stockcharts.com, you're in the daily, right? 1 year. The extra bars is 15. That's this space right here that I like to keep open. Exponential moving average. You hit this drop down, put in exponential moving average line. It defaults to 20. And you get relative strength, commodity channel index, and MACD. Right? It's pretty simple, but that's how you would set it up. Okay. So a couple things on this. Here's a 3-month daily of the C fund, right? So the last one was 1 year. It's a little bit easier to see if you drill down in time. So if you wanted to use this is another thing I'm kind of playing with. So back here, CCI got above 100, right? RSI got above 50. MACD had turned. We got above the 20-day moving average line, and we got this run up in March. So maybe we could have gotten that, a pretty good chunk of that run up. What if you, instead of saying, okay, I want to use CCI at 100 or minus 100, what if you said you wanted to do it, what if you said you want to do it at 50, right? So RSI just got above 50 there, and CCI wasn't at 100 yet. MACD had already, histogram was already moving higher and had already turned, and we were above that 20-week or 20-day exponential moving average line. So I'm saying that, in this setup, it's a day that you could get back in. If I did that, then any close below that 20-day moving average line would be my sell signal. Hopefully that makes sense. S-Fund, same kind of thing. MACD had already crossed. Histogram was moving higher. CCI was not at 100 yet. And RSI had just gotten right at 50. And we're above that 20-week moving average line, 20-day moving average line. So you can get in. Problem, of course, on the S-Fund, you get a bunch of overhead resistance that you're looking at here. So you have to take it all into context. iFund broke out a little bit earlier, right? We had RSI at 50, CCI, above 0 but below that 100 line. MACD had already crossed, and we're above that 20-day moving average line. And we had a little run up in the iFund, and it continues to go up. Okay. And the F fund, same thing, right? We get above that 20-day, get above 50. And in the F fund, it was a stronger move, right? Because CCI is the price move relative to the 20-day average. And since this had been flat for several days, this one big jump pushed CCI up into plus 100 in one day, which ordinarily would indicate it's a strong move in that direction. But in an overall bear market, it didn't last long. So the indicator works really well as a place to get in, but there's no guarantee that price continues in that direction. If it's an ongoing bull market, that's fine, right? You're probably in good shape. But always the number one most important thing is to know the general direction of the market. And right now, the general direction of the market is down. There's no question about that.
Right. So if you use this indicator and it makes you want to buy, right? Yep. You want to get back in stock funds. You have to know that if you're on a larger trend down, which we are right now, you're going to have to be just as quick to get right back out.
Yeah.
Now, if the larger trend was the other way, it's not going to be quite as important. But right now, if you choose to kind of follow that, line of thinking, line of analysis, then just remember the other part, right?
Yeah.
Don't forget the overall trend of the market. We always start there. Right. That's when you first look at it. You always have to look there. Then you go down, then you come back out again, and then you make your decision.
Yep. We're doing the webinar on Tuesday, the 7th.
Right. We have a webinar. If you go to our public Facebook group up at the top, you can. We do a monthly webinar in there, and this month's topic is
how to build a plan for this bear market.
Yeah.
Right. And so it's how to build a plan would be a good title anyway, but how to build a plan for this bear market implies that we're in a bear market.
Right.
And so the first part of building your plan is knowing, what the landscape is.
Right.
basically the geography is you're in a bear market,
right?
And you got to be willing to accept that as a foundational principle. Because if your mindset is, oh no, the market always goes up, and we hit these new lows, and this has to be the bottom.
Yeah, we're not there yet.
You get killed.
Yeah. Can't think that way.
No, you can't.
You can. It's going to hurt.
Yeah, it's going to hurt. All right, XLE. So XLE has been crushing it. It was the best performing sector in 2021, best performing sector so far this year. And how can we use the setup that I was just showing you guys to have seen that when to get into XLE? So, like the rest of them, it was forming this base. So XLE is in this consolidation, flag pattern. It's declining. And you can see it in the relative strength, right? It's not that great. MACD had been trending down for quite a while. Then in January 22, you have a big positive candle, right? And it gets you back above that 20-day moving average line. Immediately on the same day, RSI gets above, bounces up that 50 level, and CCI goes to plus 100, and MACD had already turned. So all the indicators are turning positive. And if you had drawn the trend line, right, if you were watching this, there was and not even to mention the fundamentals that inflation had already begun kicking up and the rest of it. If you had just done it from the technical analysis piece, that was clearly the day to get back into the XLE. And it just so happened, because you would have no way of knowing this, but it just so happened that from that point, XLE was going to be by far the most overperforming sector in the S&P 500 so far this year. So it's pretty valuable. That's why my charts are stacked this way. And the only thing that I don't have on this chart, because if I added it, you wouldn't be able to see it because we don't have enough real estate on the screen, is volume. And it's a pretty important one. If volume doesn't confirm a breakout, then it's probably going to fail. I'd have to go back and look and see what the volume actually was on that day, but when you set it up yourself, you probably want to have volume in there also. Okay. All right, TSP fund charts. So we had a huge week last week on the C fund. We're giving some of it back this week. Nothing's really changed. We're still trying to get back above that 20-week exponential moving average line before there's any chance of a new sustained rally. And obviously, if even at 42.81, we were down here at 3,800. This is a big percentage move, right? We're not trying to catch the tops and bottoms. We're trying to be on the right side of the trend. And right now, the trend is very clearly down. And RSI on a weekly basis is rolling back over. So it doesn't look good. S-Fund, I don't know, not much better. Every time it's tried to hit the 20-week moving average line on the upside, it's gotten rejected. We haven't even come close to that 50 RSI line at all in 2022. So in a very clear down channel on the S fund, absolutely no reason to be there. I fund, not too much different. Put in a more of a extreme low here, so it makes sense that we have a little bit more of a snapback. We're definitely going to hit resistance here at that 20-week moving average line, just like we did back here and back here. If we can get above it, that'd be great. If we did, you'd see it down here in RSI because it'd get above 50, but it doesn't look like it wants to do it. So I'm not too, even though we had a couple of weeks higher on the I fund, I certainly wouldn't be buying into it yet. And F fund, same thing. We had this huge down move, actually the biggest in the history of bond funds. And then we had the last several weeks were really positive, but we couldn't even get back above the what is that, 30 line. And it's rolling back over again because we know that the Fed is going to continue to raise rates. So it's bear markets are long and grueling, and we're not anywhere near the end of this one, in my opinion. So that's all I got.
Questions. If you got questions, throw them in the comment section wherever you found the video. Facebook, YouTube.
Absolutely.
We're starting to post them on Instagram if the Instagrams let us.
Yeah.
Sometimes the videos are too long, I think. But yeah, if you like it, share it with your friends. If you don't like it, share it with your friends.
Yep.
If you guys, seriously, if you have any questions, though, please, we love questions. Sometimes when you put them on YouTube, it does take us a day or two to respond because we're not watching YouTube comment section, but it does give us an alert and we can get to it. And usually if it's really personal in nature, like your personal circumstances, we might not, we're not going to try to give advice over the internet. Yep. That's not our,
not our thing.
It's not our thing. All right, guys. Hope you enjoyed the show. You got any last words for us?
CCI is worth looking at. That's all I'm saying. That's the chart setup that I'm using. So take a look at it, see if it works for you.
Yeah. All right. You guys have a great week, and we will see you soon. Cue music.